Okay, so let's go to Forex markets right now. I think Forex market has a bit more volatility than in the indices, especially the pound. A lot of the pound pairs are moving because of the indies inflation news just in a couple 1 hour ago. Okay, before I start FX, let me just show you. I promise you that I will show the trade of the week every time I do a webinar, right? So let me see. So what I'll do is that I will if I see any good setups throughout the week, I will take a screenshot and show it to you and and basically go through how the trade was being taken, where the stop loss is, what's the outcome and things like that. Okay, because I don't just talk hindsight. Of course, I give you a market outlook. I talk about hindsight to teach you, to show you examples, to highlight the theory that I mentioned. But I also want to show you certain things that I spotted the previous week and what's the outcome. So let me see, what was that? Okay, so this was the one. All right, so let me show you. This was Euro Aussie. This was, can you all see? Let me zoom in a bit more, sorry. Too much. There's only 100 and 200. Hold on, sorry. Okay, so right now, if you look at this Euro Aussie, okay, Euro Aussie, this was yesterday actually. Yeah, it was yesterday. Now, I did mention that I like to trade when 3 of the time frames I'm looking at are doing the same thing, are in the same direction. So this is exactly just that. If you look at the 4 hours here, this is the 4 hours on the right. Middle is 1 hour. Left is 50 minutes. And all direction is pointing down. Okay, similar. Okay, so 4 hour, yes, is not the cleanest of downtrends, but the momentum, especially if you look at the moving average, is still pointing down. Okay, the key thing for me was this level here. Because if this level was broken, right, then very, very high chance that we'll go to this key support in the 4 hour chart. The daily chart says the same thing. 1 hour chart, nice and bearish as well. Look at the key level here. This key level here seems that it's being broken, isn't it? And if you look at the 50-minute chart, 50-minute chart, beautiful. Very, very nice support established here. Nice big red candle to the downside and a pullback of this green candle. Okay, so let me just take away some of the lines. Okay, so I was keen on getting in on this, and basically when it pulled back to the previous support that was broken, okay, there was a short opportunity here. Okay, stop loss above the high. Okay, somewhere above the high. Okay, but basically this is a nice trade to the momentum of the market because all three charts are saying the same thing. So it's quite a straightforward bread and butter setup for me. So if you look at the Euro Aussie, now where we were, if you look at the 4 hour chart, okay, no, let's go to 15-minute chart. Okay, this was yesterday. So where we were here. See this? Okay, so if you see the breakout, see nice support, pull back here. Okay, if you follow this trade, you have taken a short here. Okay, and your stop loss somewhere above the previous high here. Okay, and even though the market took some time, in fact, it broke back above it. Okay, almost hit the stop, but then it came down. It took some time. It took the whole night actually. It only started coming down about 12 midnight. This setup came at about 4. What time was it? Yeah, this setup came about 4:35 or so. Okay, it took the whole night before it dropped, but it still worked out, and it exactly came to the level that I was talking about. If you look at the 4 hour chart, right? Exactly came back down to this level. Of course, now it's different because this support is very strong and then it bounced up. Okay, but this is a really nice trade plan, and again, I'm emphasizing this because it shows is just to show you if you trade with the momentum, much easier trades out there. Okay, so you see the 4 hour chart was down, the 1 hour chart was down, the 50-minute chart was down, and this was how the entry was taken, the stop loss and profit target met. Okay, now I mean that's a different story because short up, but I just wanted to cover the whole thought process behind the trade, whether it materializes or not. Okay, and the whole idea why I took a screenshot is because I also don't know how it happened, but the pattern came out. I just followed the trade plan, and the result was independent. Okay, any questions? If not, I'll move on to the majors. Let me cover the majors. Okay, so, oops, sorry. All right, so now we have euro dollar. So euro dollar on the daily chart, is actually quite range bound, and we are entering a key resistance area. So let me draw two lines here. Okay, so you can see these two lines that I drew. All these levels here are pretty, see all this? This, and potentially this. Okay, so all this is approaching key resistance level. Key resistance level. The level, let me go back to my tool. Level is around 108, 108.20 to 108.50 or so. Okay, this 20 pip range level. This is a key resistance. We are approaching there. Yep. Take away lines. Okay, so if I go back into the daily chart, you can see that we form a huge inverse head and shoulders. This circles I think I drew months ago in one of the webinars. The shoulder was respected key support, and then it started forming high, 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 low, high, 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 low, and it's touching resistance. Okay, now if you zoom out a bit more, if this key level were to break, okay, I'm not surprised that we are back in play to this region here, around above the 1.1, 1.1. We were there for the most of 2016. Okay, now 2017, most probably we are testing this area. Now, if you look at the shorter term charts for our chart, okay, definitely bullish, no two ways about it. Question is whether there's still any more meat to the upside. Okay, not much left. If you ask me, probably 20-30 pips max because of that key resistance which I drew for you just now. Okay, intraday wise, any trade plan? Nah, a bit too late. Okay, this was a possible, this is a 15-minute chart by the way. Nice uptrend. The only way you could have gotten in was probably 5 p.m. or so today, just 2 hours before the webinar where I came back down. Okay, but then it didn't come down to the previous resistance and support, so it might not have triggered your entry. But this was the first level you could have got it in, but now it's just a bit too high. Okay, so it's still an uptrend, just not much entry. You might want to consider looking at the short side. Okay, especially when it's approaching the 108.20 area. Okay, why? Because it's a very, very clear level, especially on the daily chart. Look at this. Okay, and if you zoom out, it's a very clear level. So we are approaching. So 108.20 to 108.50, look for, have a look at those levels. Okay, possible the market should react from there. It should react from there. If you're going to take a shot from there, I think your stop loss, this will be a high term play because it's based, the reference chart is a daily chart. If you're going to take a shot around the 108.20 to 150, your stop loss should be at least above this shadow, around the 108.80 or so. Okay, which means your target need to be at least 1:1. Okay, so that's euro dollar for you. Is entering a very key level of resistance. Going to dollar yen. Okay, dollar yen, I think the 2 webinars ago I mentioned that I was bullish, and the reason why I was bullish because there are 2 levels of resistance here. One is around the 114.50, the other one is around the 115.40. Now, we were stuck in this range for most parts of 2017, and last week before the FOMC on Wednesday, Singapore time, it actually broke the resistance of 114.50. Okay, which led me to think that awesome, we might push higher and we might go to the top of this this consolidation pattern, because if you zoom out, you can see that it's a bit of a consolidation. Actually, it's more if you look at the weekly chart, sorry. Okay, this is what I had on the weekly chart. So I was actually looking for a breakout. So the first level broke out, and I was looking to stack my trades or pyramid it up to the resistance around the 116.40 or so. That was my trade plan. Okay, but then FOMC came about and changed everything. It's quite interesting, isn't it? Any one of you traded FOMC last week? So my initial trade plan is that yes, the first level of resistance break, happy to go long. If the second level of resistance break, happy to add on to the longs and target is around 116.40. But then I was also very mindful of the FOMC that came out Wednesday. Any of you traded the FOMC? So the FOMC, I mean, it's quite interesting because a lot of some traders were a bit puzzled. Nowadays, I mean, whatever the news says, most of the time it's always buy the rumors, sell the news kind of scenario. Okay, so I think a lot of people, in fact, the Bloomberg consensus already predicted 100% rate hike for the March one. So USD was quite strong prior to the event. No surprises when the rate hike did come. Instead of a normal reaction of USD strengthen, it actually weakened. It actually weakened, okay? Because a lot of profit taking took place as well. So right now, dollar yen, it has broken back down to resistance. So again, back to the lesson I covered today, this can be considered a false breakout as well. Okay, because you can see that this is resistance here, resistance, it broke out upside, stayed a few days there, and then the candle closed right back below it. So this is actually a false breakout as well. Okay. Crystal, you have a question? Hold on, yeah. Yeah, X, that's right. Janet didn't sound hawkish enough. I mean, fundamentally, yes, she didn't sound hawkish enough, plus the rate hike was expected, so the combination weakened USD a lot. Not the biggest surprise these days, especially how the market reacts. Okay, I mean, 5 years ago, when it comes to news and how the currency react, it's more or less straightforward. Okay, but right now it's a bit more tricky. Okay, just how sentiment is at the moment. So you got always, for me at least, I always think that the charts or technical analysis comes first before fundamental analysis, especially if you're a trader. That's my opinion. I know some people just swear by fundamental stuff, but for me, technicals are more important. If you're a trader, okay, investor, then in fact, I think even if you're investing, technicals are important. Okay, but I swear by my price action technicals. Okay, Sunil, you said the lowest though in the larger picture is still higher low. Are you talking about the weekly chart? Yep, you're right. In fact, I know why Sunil was saying that this is still a higher low, correct? It is still a higher low, exactly. Which is why when the daily chart, when my daily, when dollar yen broke the 114.50, I was very keen to target this level here because I thought that finally the bulls would take control and push up. Who knows, it might push all the way to 1-2, I don't know. Okay, but this is what I have my weekly chart, a big fat consolidation. Okay, but it is what it is, doesn't want to go up yet. So next level I'm looking at is back to the support level around the 112, 111.80 to 112. Okay, I'm not surprised if you come back here sooner rather than later. Now, if it breaks this level, then it's a whole new story, okay? Because if we go weekly chart, if this 112, 111.80 breaks, right, that's different already. Okay, that's different. Then there's a chance that it might drop all the way to the bottom here. Okay, so this level here, 111.80 to 112, is very, very important level, especially for the bulls. Especially for the bulls. Okay, so if you see if this is a good support level that you want to take note of, you might want to put alarm there. Yep. Even if you look at the Sunnis, even if you look at the daily chart, the last two also says the same. When you say last two, you mean the last two touches? You mean this two, right? Yep, this is it's a key support level. Yes, agreed, Sunil. So this is a very key level. So for those of you who are looking to long dollar yen, this is a key level you'll look out for. Yep. Crystal, I think you have a question. Crystal is asking, when you say add on, do you mean opening another position? Yes. So what I do is that if I see a range bound condition like that, let's say for example, if I have a long position here, if I have a long position here based on the support, and then it starts going up, and then it breaks above a key resistance, I'm gonna add on to it. But by then, this trade here will have zero risk already, because most probably either I will move the stop to break even, or I will have taken profit here, so that my second trade to the upside, because of the resistance broken, is already paid for. So that's what I mean by adding positions. Maybe one day I'll cover a webinar on how to do pyramid trading in terms of stacking your trades and maintaining the similar level of risk. It's very useful, especially the trend is one direction, but you need to be able to be sharp enough to get out when it's wrong as well. Okay, because the last thing you want to do is to buy here. Okay, the last thing you want to do is to buy at this support level, which is a good level, buy the breakout, and then don't manage it properly and the whole thing just fall down. You are in losses because of this long trade, and your previous very profitable trade is almost back to break even. Okay, so it's something you need to be very sharp and understand your price action well to know when the market is turning around already. Okay, for this case, very clear cut because number one is news driven, and number two, you see how big the red candles are and close below the key resistance level. So it's clear cut that the bears are back in control. So most probably we are back to touch the 180 to 112 support level. All right, Crystal. Okay, so that's dollar yen for you. Any other FX pairs that you want me to cover? So right now for dollar yen, right? If you look at the 1 hour 4 hour chart, this level here, okay, this is the immediate resistance level. Okay, so you can see very nice downtrend, lower low, lower high, lower low, lower high. I'm not sure how many of you took shorts around here, but these were decent levels. Okay, if not, right, let it break this level here, 11240. So let's go to lower term time frame to have a clearer picture. Okay, so we are in some form of consolidation, a lower term time frame. Okay, so if you're alert enough to take resistance here short, good for you. If not, let it break. Okay, we had, look at this, again to highlight my lesson today. Classic. So for this kind of scenario, right, yes, it's very frustrating, okay, because I get caught in this many times whereby my bias is bearish, most of the charts are looking bearish, the thing came down, I took a short here because of the pullback. This is a perfect downtrend, isn't it? Okay, and this is, if this happens again, I will do it 10 out of 10 times because it's exactly the kind of trades I'm looking out for. Downtrend the high term time frame, downtrend the daily chart, okay, because the resistance level is back in play. Downtrend the 4 hour chart, downtrend 15-minute chart, and then it broke key level. And this happens, right? My target will probably be the 112 support. I'll take a short pullback, but it didn't happen. The thing actually bounced back up. Now, what I want you to do is pay attention to this green candle. Okay, you can see that, yes, it clearly broke down, but this green candle actually reversed the entire breakout candle. Okay, remember the beginning of the webinar I mentioned the first sign of a false breakout is that the reverse candle reverses or covers almost of the entire breakout candle. Okay, that's the first sign. Second sign, the reverse candle, which is the green one, closes back above the key level, which is this line I drew here. See, the close is way higher. Okay, and then it went back higher. For this case, most probably, if I taken a short, right, most probably my stop will be here, and I will be stopped out. Okay, but so be it. That's the way it is. It's part of the game. Okay, because this is a false breakout. This is a false breakout. Okay, the question I asked then, if it's a false breakout, was there a chance to go long? For this case, a bit difficult, a bit tough, because the market didn't bounce back. Because the false breakout setup was that I would normally wait for the market to come back here, and then maybe I'll take a long from here. Okay, but it didn't happen. Okay, so there, even if you were sharp enough to spot the false breakout, it's hard to take a trade, because if you took your trade from this level here, right? Just took with if you took your trade from this level here, right? It's kind of hard to manage. Where's the stop loss? I mean, the most logical stop loss is below here, which is way too far. In a short-term counter trend, nah, I wouldn't like this setup here. Okay, so right now it came here to test this short-term support level. Okay, we are testing resistance here. But the key thing, if this level is broken again, right? If this level is broken again, high chance we will go to the 112 here. Okay, so if you're a bit more aggressive, the shorter term time frame has shown that it's coming down. First, this is the first level of resistance you might want to react from. But the more conservative trade plan, if it breaks this key level again, chance are we're going 112. Alright, that's dollar yen for you. Any questions? Sunil, okay, let me see. Okay, I'll cover CAD yen soon X. Do you have line of sight and retail traders? Okay, Sunil's question is, do you have a line of sight where the retail and institutional traders are positioned? No, I don't use any of that, Sunil. Basically, whatever I want to see is all displayed on the charts already. Yeah, I know you can use, there's a CBOE report, what's it called? There's an option report, I can't remember the name, whereby you can see where most of the options at which levels are. For example, like dollar yen, I'm sure you can see a lot of options around the 112 level and things like that, just to show where the big traders are positioning. That's one of it, but I don't use that. Second question, Sunil is saying, let me see. Yeah, same question. Now, I don't use that, Sunil. I mean, I used to look at that, the options report, but after a while I find I just stick to my charts. It's more than enough, good enough. Yeah, I mean, honestly, like mentioned in the previous webinar, this 2 years, I've been focusing a lot, I'll say 80% of my time on my psychology, doing a lot of meditation, a lot of journaling, and a lot of simulation trading on my Forex tester software. And I'm focusing a lot on psychology because for me, that is the key thing that will take me to the next level. Yeah, so I don't need anything that gives me more analysis paralysis. I'm not that keen because I'm very comfortable in my strategy. It's just honing in on the psychology. Yeah, but you can look for it. I think I'm not sure whether the CBA website has it. Do you know where to find it, or you're asking me where to look for it? Because if not, I can find it for you. I can find it for you and send you email or something. Because I think I used to have the report somewhere. Okay. Okay. Let me go to Cat Yen. Oh, you're asking me, is it? No, I don't use it. But you planning to use it? Because I might have some link that I can send you. Okay, let's go to Cat Yen. Hold on, yeah. Okay. Okay, sure thing, Sunil. Let me look for it and then I'll send it to you. Okay, X. You got Cat Yen. Let's see. Ooh, nice. Oh, I like this chart already. Okay, let's draw. I'm not analyzed Cat Yen yet, but no problem. Let's do it. There's a bit of resistance here. Support. Okay, Cat Yen. I'm liking what I see already. Okay, come, let's do it. So this Cat Yen, if you look at the bigger scheme of things, actually looks quite bullish, and based on last week's webinar, okay, it's actually consolidating some kind of flag. Sorry. Okay, so it's actually consolidating in a short-term downtrend bullish flag. Okay, and I mentioned last week's webinar that such correction, right, is actually the trickiest because the short term or medium term is on the downtrend, the longer term the uptrend, so there's a bit of fight going on. Okay, if you go back to last 2 weeks webinar, the last webinar, I did mention that the horizontal correction is the nicest because there are a lot of entry levels for you to enter on. But for this case, it's a bit more tricky. Now, I drew a few lines here. So resistance around the 88.20 level. Support is around the 85 level. You see all this resistance to support. Now, if I zoom in here on daily chart, it's still consolidating. Okay, the key support 85 seems to be broken. Okay, and in fact, this nice red candle seems that 85 level has been broken. Now, let me just zoom out a bit more. See if there's any level of support. There's not much level of support here. Let's draw a line somewhere here. Okay, next level of support is around 84. Not the strongest though. 85 is much better. Okay, but it is what it is right now. Okay, so pay attention to this level here. It is also support because of this trendline support and also the horizontal support. Okay, let's go to 4-hour chart. Okay, so this level where we are right now is actually support. What I like is that it has formed a double bottom here. Okay, the short-term resistance is somewhere here. Did the circle. Okay, now take note what happens around the 84.70 to 84.75 level here. Okay, it might just consolidate sideways. Okay, in fact, if it consolidates sideways, right, if it's back to support level, take note of these levels here. Okay, but if it breaks above, right, then okay, if it breaks above convincingly, then you might want to take trades to the upside and target maybe the top of this level here around the 86. Okay, but right now the 4-hour chart shows signs of consolidation. Okay, but you want it to break all this mess first. See this mess here? You want it to break cleanly above first, then you find entries to take it up. Okay, either that, or if it does not break all this mess here, it comes back down here, and you can see the support level here, then there's another level you want to look out for. Okay, because this area here is a pretty decent support level. Okay, let me just take away the colors. Okay, X, you get what I mean? So that's a trade plan. Okay, the 50-minute chart looks bullish already. Okay, but if you see it's approaching resistance, so even the 50-minute charts look bullish, right? Can't do much anymore unless this key level is broken. Okay, then maybe you can target the next level, but right now can't do much. Okay, but if it drifts back below and then comes back to this kind of support level here, right? Somewhere around here, then okay, there's another level, there's another chance to enter. But right now, a bit too high, it's a bit too near resistance, not much meat. You want it to break it first. Okay, X. Okay, so okay, I'm gonna cover Aussie dollar, then I wrap up for the day already. Aussie dollar. Okay, Aussie dollar, beautiful. Thanks for asking because I want to cover it. So the last time I mentioned Aussie dollar, right? I showed you this weekly chart. Beautiful, beautiful resistance all the way from 2016 here, and where we are right now. Okay. Anywhere between 77.25 to 77.80. That's about 30-40 pips. Okay, but it's a long-term chart. So we are at that level right now. Can we break it? I don't know. Okay, the probability is that resistance is still resistance unless it's broken. Okay, resistance is still resistance unless it's broken. And when we were here, I think one of the webinars, couple of webinars ago when we were here, I did mention that in February that this was a key resistance level. Okay, and it actually came down. Okay, what I like about such trades is that the risk to reward ratio is fantastic because you can see that here, see it make a double top. If you take a short anywhere here around 77.30, your stop loss above the previous swing high, maybe your 77.80. Yes, about a what 50 pip stop loss. Your target, let me see, your target could be 77.30. Yeah, your target could be all the way to 76. Okay, so it's still positive risk to reward because for this kind of trades, right, the risk to reward is always favoring the trader. Okay, so right now where we are is approaching a key level again. Okay, a resistance is a still resistance unless it's broken. So I'm more inclined to think short side. Okay, unless there's really a nice big daily candle close above all these levels. But if I zoom out, right, you can see how beautiful it is. And if you look at this level here, you see this? This is exactly what we mentioned the whole webinar. False breakout. False breakout. Okay, so some of you who think that you want to short here, stop loss above the previous swing high here around 77.80. Yeah, it's a decent trade plan. Okay, but if it breaks up like that and stops you out, but then comes back down again like that, okay, you cannot let that loss affect your trading decision, and you need to be alert enough to know that this is a false breakout. Okay, this is a classic false breakout. Okay, it confirms all the pointers that I mentioned in the webinar of a false breakout. Number one, the red candle reverses the breakout candle. Number two, the red candle closes below below the key level, and so on, and then start coming down from here. Okay, so just take note where we are right now. So this level, I'm a bit more bearish. Of course, the shorter term trend, the medium term trend is still bullish. All right, if you look at the 4-hour chart, it's still bullish. Okay, but this resistance seems to be quite strong, very strong actually. Okay, so just take note of it. Will I go long? No. Okay, not long. A bit too late already. Okay, because even though it's uptrend, right now it's sitting at key resistance. Okay, in fact, if you go to a weekly chart, when was this? This was 20th April 2016. If you go weekly chart, look at that. Oh, this is perfect for false breakout setup. Look at this. So even though yes, the time frame is a bit higher, weekly chart, daily chart, but it's exactly the same theory for any time frame when it comes to false breakout. Okay, so this case, see, false breakout, beautiful bearish pink candle, and if you go back to the daily chart, this was a beautiful setup. See one? The whole thing just U-turn back and fulfill all the criteria. Okay. So I try to throw in snippets of theory and strategy for you when I cover the live market so that you are able to identify it even though if you're not familiar with price action. So yeah, just take note of such things. So today, 2 weeks ago, I covered how to trade a corrective structure. Okay, you might want to go back to the recorded video. Today I covered how to trade the false breakout. Okay, and the subsequent weeks I try to cover new other strategies that you can implement, that you can put it as part of your trade plan. Okay, so I mean there are many there are different strategies that can combine, but at the end of the day, it's all about price action. If you're familiar with price action, you can incorporate all this and make it easy. Okay, so the whole point of all this strategy is to make it second nature. Okay, to make it part of your subconscious mind, so that when you're pulling the trigger, you do not hesitate. Okay, because you are ingrained with the strategy. It's coming from your subconscious mind already. Okay, once you hit that level, then you need to focus on your psychology, which is things like your self-image, your unconscious mind, your prefrontal cortex. So all these are part of your brain that forms the psychology of trading. Okay, trading is very interesting because it's more than just strategy. Trust me, the psychology part is so interesting. And throughout the process, throughout the learning journey, you will learn a lot more about yourself as well. Okay, a lot more about yourself. Which one is your weakness? Which one is your strength? Okay, are you somebody who always tell yourself that you can't succeed? Okay, so all these are more towards your unconscious, subconscious behavior. Sorry, your unconscious, your self-image kind of issues. If you're if you're kind of trader whereby you see a setup on the chart but you are hesitant to pull the trigger, then it's more of your subconscious because your subconscious is not strong enough, which means that you did not practice your strategy enough. Or if you're somebody who can't sit still, that means you look at your charts, 5-10 minutes, you get restless, you watch TV, you start surfing the net, checking Facebook and things like that, then maybe it's more of your prefrontal cortex whereby it's too restless. Okay, you can't calm yourself down and focus on the markets. So different types of your brain, you need to analyze, and that is what I'm doing for the past 2 years in terms of where am I in terms of, when it comes to trading. Okay, and it's very, very useful information for a trader to understand which phase of trading he's in, which is his weakness, and then try to fix it. Okay, so this is I mean one of my goals is hopefully do a lot more psychology, because I think there's such a lack of awareness on trading psychology out there, especially in Singapore. A lot of people teaching strategies, which is good. Okay, but very few are doing psychology. Okay, so as usual, I exceeded my time. Again, this webinar will be recorded. Do watch the recording if you want to familiarize yourself with some concepts that I mentioned today. If not, thank you so much for coming tonight. Appreciate your attendance, and I'll see you in 2 weeks. Have a good night. Take care.